Just a quick reminder before we jump in. This analysis is for educational purposes only and is not financial advice.
So, you see a stock that's absolutely skyrocketed, up 385% in just a year. And the big question hits you, did I miss the boat? Or is there still a smart way to play this?
Well, today we are diving deep into that exact situation with Vicor Corporation, ticker VICR. We're going to break down the company, figure out what's causing this insane surge, and then lay out a very specific swing trade setup for the next 30 days.
As you know, what we do here is analyze stocks to help you understand what's really moving the market. So, let's get right into it with Vicor. First things first, we need to understand the company itself. What exactly is behind this massive stock surge? Well, when you look at Vicor's financials, it's less like a typical tech company and more like a financial fortress.
So what does Vicor do? Well, they build something absolutely essential: high-performance power components. Think of them as the super advanced power supplies for the hungriest technologies out there. We're talking AI, massive data centers, and even the defense industry. And here's the kicker: they're the only major US-based manufacturer doing it.
This is what investors dream of finding: a company with an impenetrable moat protecting its business. And Vicor's is a beast. They've locked down their tech with over 100 patents. They control their entire production process from their billion-dollar chip factory. On top of that, they've got legal orders blocking competitors and a brand new tariff that just changed the entire game.
And that powerful moat? It shows up in the numbers. Let's run through them real quick. First up, revenue growth is clocking in at a very healthy 26.1% year-over-year.
Now for financial health. Check this out: a perfect 9 out of 9 on the Piotrowski F-score. You almost never see this. It's basically a perfect report card for a company's financial strength, and it's a huge green flag.
And this right here, this is what really drives home that fortress idea. Total debt on the balance sheet? Zero. Zilch. They owe absolutely nothing.
And to top it all off, they're sitting on a mountain of cash, over $400 million. This means they can fund all of their own growth, their own expansion, without having to borrow a single dime.
Okay, so we've established Vicor is a rock-solid company, but fundamentals alone don't make a stock go parabolic. For that, you need a catalyst, a massive, game-changing event that completely rewrites the rules.
And here it is. On February 23rd, a 100% tariff was slapped on competing Chinese power modules. Because Vicor is the major U.S. manufacturer, they are totally exempt. This move literally doubles the cost for their main rivals overnight. It's an absolutely incredible competitive advantage handed to them on a silver platter.
And boy, did the market notice. Just look at these returns. Up 94% in the last 90 days, 72% just since the start of the year, and that insane 385% gain over the last 52 weeks. This is what a true catalyst looks like on a stock chart.
But, and this is a huge but, this is precisely the moment where you have to be disciplined. As the research points out, moves that go straight up like this are, by definition, unsustainable. Chasing the stock at these all-time highs is incredibly risky. It's a classic bull trap.
So, if you're finding this breakdown helpful and you want to see how we can turn this risky situation into a smart, disciplined trade, do me a quick favor. Hit that like button and subscribe. The full 12-page report we're referencing is also linked for you right down in the description.
Okay, so if chasing the peak is off the table, what's the actual plan? This is where we get into the nitty-gritty. Here is a disciplined strategy for navigating the stock over the next 30 days.
The strategy is simple, but it requires patience. We do not chase. Instead, we wait for the inevitable profit-taking, and we plan to enter on a pullback to a key technical support level. It's all about letting the trade come to us, which dramatically improves our odds.
All right, let's get specific. Here are the numbers. The entry zone we're watching for is between 170 and 175. That's the prior breakout level, and it should now act as a new floor of support. Our stop loss, our safety net, is set at 155. Now the fun part. Target 1 at 190 gives us a solid 1-to-1 risk-to-reward ratio. But if it runs to target 2 at 210, you're looking at a potential gain that's more than double your initial risk. That's a setup we can work with. Now, a plan is useless without rules, so here they are. 1, you enter with a limit order to avoid overpaying. 2, the second you're in, you set that hard stop loss at 155. No excuses. 3, once you hit target 1, you sell a portion, and this is key, you move your stop loss up to your entry price. Boom, you now have a risk-free trade. Then you just scale out at the next targets. This is how you manage risk like a pro.
Of course, no trade is a sure thing. It is absolutely vital that you understand both sides of the argument here, the bull case and the bear case, before you risk a single dollar.
On the one hand, the bull case is powerful. This tariff could create a U.S. monopoly. They have that fortress balance sheet, and their tech is critical for the AI boom. But the bear case is just as serious. The stock is trading at an extreme valuation. It's heavily reliant on a single big customer, and its high beta means if the market turns south, Vicor could fall more than twice as hard. You have to respect that risk.
So it all comes down to the single, crucial question. Is Vicor just a temporary tariff play that's going to fizzle out, or are we watching the birth of a long-term American monopoly in a critical technology sector? That's the multi-million-dollar question.
So what do you think? I want to hear your take. Is Vicor a long-term monopoly in the making or a short-term trade? Let us know in the comments and tell us which stock we should break down next. For more insights, the full report is linked below, along with our communities on Twitter, Telegram, and Reddit. And if you haven't already, subscribe so you don't miss the next one.
And as always, remember, this is all for educational purposes. Be sure to do your own research before making any investment decisions. Thanks for tuning in.